I actually think that this is a lesson that everybody should have in their life for free anyway. So let's just take the rest of the show and explain how to look at markets on a volatility adjusted basis using the 3 buckets of volatility that only Hedgeye has defined within the lens of our quad process and the signaling process, okay? There are 3 buckets of volatility for you to think about, okay? And we'll use the VIX as an example, but I will come back to the Russell, which RVX, which is the equivalent of the VIX for the Russell, and well put by our subscriber on that. So we have, let's color the buckets so that you understand, okay? And we're going to use the VIX. The VIX, the investable level, investable range and levels of volatility, levels within the range. For the VIX, let's call it 10 to 19. Anytime the VIX is oscillating in between there, it can't get above 19, keeps plowing to lower lows. Every bull market's ended at 10 VIX or lower. There was actually one sniff at 9. So that's called the investable bucket of volatility. That's when the pizza guy in Boston who's giving you ratings on that and stocks even looks smart, okay? Easy, really easy. We can all do it. Actually, I wish for the people that were always in quad 1 or 2 with the VIX in the investable bucket of volatility. Okay? Just think of volatility. Volatility is the number one thing that will drive fear. Your amygdala is triggered, you're panicking, you're puking, you're looking for political reasons. All right, okay, so you come out of that bucket, and then you get into what we call the chop bucket. So this is actually where I live. I love the chop bucket. So this is a chop bucket, chop, hashtag chop, where you're basically greater than 20 and rising towards 30. But when you go back and forth in that bucket, like that, let's give you a little bit more as opposed to being, let's use my girlfriend, Pink, one of my favorites. She's a beauty. You're back and forth, back and forth, back and forth. You can make a lot of money as a trader. I know some people call me that as as an insult. I love trading. That's good market to trade because every time you go to the top end of the range in the VIX, and then at the low end of the range, you don't want to feel any of that. This isn't riding a roller coaster. You're not 12 years old, or at least most of you aren't. The chop is really good in a bull market that's got people trying to call tops, trying to scare the shit out of you, trying to make money on clickbait, whatever. Then we have this very, for those of you that know this, you can wait on it. So this is called the fuck bucket of volatility, right? So this is when you go greater than 30 volatility and you stay there. And you stay there, and you stay there, and you stay there. That's like the roller coaster that doesn't go off the top. It's the one that breaks and everybody dies. And I've made that call a lot. So again, it's within the lens of quad 4, economically pending. That's what the market is front running when volatility, as opposed to in here, is episodic and non-trending. Greater than 30 and staying at 30 is episodic not and trending. When oil volatility went to 320, never mind 32, the oil price went negative. That was the most volatility any major asset has had ever. Bitcoin may get there at some point. I don't know if it's going to go to 0. But these are this is how you should think about fading yourself. Think about all the issues I have. Clearly, if you love me or hate me, you can see those. I'm human, right? But I've found a damn good way to fade my feelings. Fade the idea that I know more than the market? Fade the concept that there's some intellectual base to this? No, it's actually, from a practitioner's perspective, a lot like professional sports. The greatest enemy to you making money is yourself. In sports, I coach it this way. It's your ticker. You can have all the talent in the world. And most people that went to schools like Jonesy and I did, at least on paper they do, and they have number 2 as well, which is intelligence. On paper, absolutely. Some of the smartest people I've ever seen on paper are some of the worst traders, risk managers, investors you'll ever see in your life, right? Because the next ones, compete and resilience, are what define somebody who can play at the highest level. Somebody who can take a punch, somebody who can take criticism, somebody who can be coached by somebody like me and like it, all right? So again, once you get into these periods, are you going to be resilient? Do you have the process to understand we just went to the top end of the range in the chop bucket and we backed off? So just to come back to this full circle on your RVX question, because it went out at 27 yesterday. Well, what happens if it's going back towards 20 and drops into this bucket? That would be defined by rising probability of quad 2. So it's not about 27 being higher than the number you saw when I said what I said the day before. It has nothing to do with what I said the day before. This isn't an audit by an intellectual. If you want to audit me intellectual, have at it. But I'm going to keep moving because the game is all about playing the next game, setting up for tomorrow. It's not going back and saying, well, if I look at the prior valuation of this market, the typical, the average decline was this. That is so old wall. So old wall. We are stochastic. We believe in non-linearity. We believe in jump factors, jump conditions, just like in the world. You ever see an avalanche, a hurricane? Imagine you were, most people that do this professionally at Morgan Stanley or wherever, one of my main competitors, a lot of respect for Mike Wilson. I can't understand how he's coming up with this type of thing. The only thing worse than making a 10 to 12% correction is stepping on it when it's below your 50-day moving monkey on Monday saying it should be 20. And then it going, Evergrande going up 32% a day. Again, it's not critical. It's just holding to account a process that doesn't work. So again, saying that the average of things, moving average of things, the average correction in things, the average valuation of things, that is the opposite of what Benoit Mandelbrot taught us in fractal math. The opposite. It's a particular thing that happens at the particular time that gives you points of entropy, breakouts, jump conditions, etc. All right? And if you get that, they're beautiful, both ways. I love the fuck bucket. I want it, but I don't. People get unemployed in the fuck bucket. I don't want that, but I want it because I'm going to make money when people lose money. I want this because everybody wins. But when everybody wins, I have to deal with CNBC coming back to life. And it's like, thank you for listening. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.